Good morning, Paul Georgie from Allendale. It's March 1st, 2011. The markets this morning kind of quiet compared to the volatility we've seen here the last several days. We got corn is called 1 to 2 higher, soybeans 5 to 6 higher, wheat 3 to 4 lower, cattle anywhere from 10 to 20 higher, and hogs 20 to 30 higher. Outside markets not giving us much direction this morning. The dollar is up 2 ticks, crude up 81, and stock indexes are higher pretty much across the board. But gold and silver showing some strength here this morning. Gold up about $12 as we speak. And, of course, cotton $7 higher, the limit up in most of the cotton contracts. Some of the news circulating this morning, COFCO, China's state buying group, they said the reason that they're not buying any more corn from the U.S. is because it's too high priced. So they're buying other products. And some people are looking at that as saying, well, that's a bullish situation because that means they need the stuff. They just are telling us that the prices are too high. But they're going to have to buy something somewhere at some time. So looking at that as a supportive factor. We've got bull spreads continuing to be done in a big way. Not sure why that's the case, but yesterday 25,000 of the May-July spreads were done, and in large amounts. So a very positive move there in the corn market to see the bull spreads moving in the kind of volume that we've seen there. The USDA did release their ethanol numbers, showing that we're 18% higher than a year ago. It's production in ethanol, which is telling us that we're going to probably need to bump up that USDA ethanol usage for corn, because we only need to increase production about 2% now for the balance of the year in order to meet those numbers. And at the rate that we're at, that 2% gets chewed up pretty quickly. So that's something to monitor and should continue to give a friendly bias. And that is the part of the market I think we're going to have to monitor very closely, is the ethanol plants continuing to use the amount of corn expected to produce this ethanol, or have they reduced their production to give us more supply toward that ending stock. So a very closely watched sector of the corn usage balance sheet. Soybeans, we've got no deliveries in soybeans. Weather in South America is good, favorable to crop production. Argentina's crop continues to get bigger from private estimates down there. Brazil does have a few spots that the heavy rains slowing harvest. However, nothing major at this point in time. So feeling that South American weather certainly is favorable. The wheat conditions, China got rain over the weekend in the wheat growing areas. It is winter time over there, so nothing real significant out of it. It's just that their dryness is being eliminated by either rain or snow. Positive for their production, should allow them to have a pretty decent crop, at least get started anyway. Russia, comments yesterday by their ag minister that if Russia produces over 85 million tons of grain, that they more than likely will open exports again. And some private forecasters are suggesting they could produce as much as 86 million tons this coming year. So it looks to be favorable for the Russian crop and the Russian exports here down the road. Over in the meat complex, choice cutout values were up $1.34 yesterday. Select up 97. Packer margins, however, is pretty weak. Our analysis and models that we run suggest that we could be as much as $49 in the red at the packer level. which that's not going to last very long, and we're already seeing and hearing of some slowdown in slaughter, in order to get this product firmed up, or a reason to buy less cattle, and that's going to impact the futures market here very closely, depending on which direction things go there. It will certainly be likely to be a standoff here as we go into the balance of the week as far as packers buying cattle. The technical aspect, futures yesterday dropped down to the 50-day moving average. That's 112.45 in the April contract. That should provide us some support here today. If we take that out, more than likely more stops will be activated and see some more pressure on this market. But as long as we can hold that level, it gives us an indication anyway we might be able to bounce back. In the pork complex, cutout values there were down 12 cents yesterday. The facts about the pork is, and Rich Nelson talked about it yesterday in a research meeting, you can get all those details on our website, but to give you a recap of it, pork prices right now are 27% higher than they were a year ago. Chicken prices, however, are about 12% lower than a year ago, and poultry production is up about 10%. So that's some of the struggles we got in pork right now. The competition that we're getting from chicken is it's having its effect, and a reason why traders are talking that we may be in for a setback in this pork complex. The 50-day moving average today in the April contract crosses at 87.63, something to watch very closely there. Another thing I want to share with you today is the Allendale is gathering data for its prospective planning's planted acreage report that we're going to gather the information, and we'll be releasing that on March 16th at 10 o'clock with a webinar. We invite everybody to join that, and you can get that information right on our website. But first of all, we need your help in trying to gather the information. If you go to our website, fill out the quick survey there, or just give us a call, and we'd be happy to take the information down. And we do need your help, because the more participants we get, the better the results and the more accurate it will be. We also want to invite you to a couple meetings that we've got out in Audubon, Iowa, and Storm Lake, Iowa. Bill Biederman will be out there this morning at 10 o'clock, and then again this afternoon at 5 o'clock in Storm Lake. You can get all the details right on our website. So we wish you a very successful trading day. If you got any questions, give us a call. We'll talk to you tomorrow morning. Thank you.